All right, guys, back to work tonight. Another great day comes to an end, but it's about that time of day again. Time to get ready for tomorrow. It's Wednesday evening. It's May the 12th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Thursday's trading session. I got a great video in store for you guys tonight. Charts are all prepped up in the background, as you can see. Got the gold, got the Nasdaq, and the S&P on our radar for Thursday's trading session. Speaking of Thursday, where do I begin? Well, we got some more big news coming tomorrow morning. Thursday morning, it's another big inflation number. I know. Another one coming tomorrow morning, bright and early. And of course, with all these big red days today, E-mini down big, Nasdaq down big, gold down big. I'm looking for chances to short the bounces, right? Selling retracements, looking for selling opportunities, shorten bounces, shorten the pops, selling retracements, whatever you want to call it for tomorrow. Looking for ways to get in on these bear markets. Now, I'll tell you right now, looking at the charts, and we'll show you guys more details tonight, these markets have some wide open spaces underneath them. It almost looks like we're standing over a cliff right now, looking down. Gold's got some big wide open spaces. Nasdaq and the S&P 500, there's a lot of downside potential here as we go in the next couple days this week. So I want to make sure we are ready to capitalize on potentially some nice big moves to continue this move here on Thursday. Now, before we jump in though and put together our plan for tomorrow, I just want to make sure to remind you guys, if you haven't done so already, make sure you subscribe to our YouTube channel. We publish this video newsletter every evening here on the YouTube channel with our best trade ideas for the following day. I don't want you to miss tomorrow night's video, so please make sure you subscribe. And when you do, hit that little bell icon so you always get notified every time I publish something new. And if you guys have any questions for me, don't forget you can always type those questions in the comments section. I would love to answer all your questions, so don't be bashful about asking questions in the comments. And if you guys enjoy the video, if you tune in every evening, if you enjoy this video as much as I enjoy making it for you guys every evening, do me a big favor, hit that like button, that thumbs up button here on the video. Always appreciate you guys tuning in and carving out some time for this nightly newsletter. But speaking of the newsletter, intro is out of the way. Let's get some charts going here. Thursday is right around the corner. Like I said earlier, we got bear markets. Boy, nothing like a record-breaking CPI report this morning to completely spoil that what could have potentially been a very nice short covering rally here today. So CPI comes out this morning, right, puts a grenade into the market, a record-breaking high CPI report number. I think everybody is seeing the inflation, but the CPI report this morning pretty much put a stamp of approval on that, record-breaking inflation number we saw. We haven't seen something this big since the early 80s here this morning. So bear markets take off the downside. Everything is bearish right now. Our plan for tomorrow is relatively simple. S&P's down, Nasdaq's down, gold's down. We're looking to short the bounces, right? Short the pops, sell the retracements, whatever you want to call it. I've got levels of resistance I'm watching overhead. And I'm looking to sell those bounces on the Nasdaq, on the S&P, and of course the gold. Now, we did have some very big moves going lower on the E-minis, the S&P and the Nasdaq to be specific. So I am watching out tomorrow for some range-bound markets. You see I got those anticipated here as we go. So we do want to be prepared for some ranges tomorrow. Anytime we see big moves like we saw today, we do expect to see ranges the following day. And then speaking of ranges, we're just now breaking free of that range here right on the gold. So, again, looking to short the bounce or short the pops here, up at areas of resistance. And as I mentioned in the intro, we have some really big, wide open spaces on the S&P, wide open spaces on the Nasdaq, and almost an easy layup for the sellers here right now on the gold down to that big round number. So I'm hoping I can find a way into these markets before we fall off that charting cliff, potentially tomorrow or Friday's trading session. Now, we know the general plan. I'm going to go into a lot more details on these specific setups here in a moment. But before we do that, though, let's not forget, tomorrow, we've got some big news coming again tomorrow morning, right? We talked about the big news of the week being the inflation reports. We had the CPI today, right? That dagger, that grenade that went off at 8:30 Eastern time this morning. And tomorrow we've got another one of those, potentially a grenade. Probably won't have as much of an impact. It might. Usually the first cut is always the deepest, right? They always say. So tomorrow, the big news, of course, yeah, there's jobless claims tomorrow, but nobody's going to be watching that jobless claim. I mean, they will be, but I doubt that jobless claims report will be what is on everyone's radar tomorrow. Everyone's kind of waiting right now to see if we keep getting these really high record-breaking inflation numbers, if the Fed will start to walk back their statement. Remember, the Fed keeps telling us they're expecting this inflation to be transitory, right? Or just temporary, if you will. So we'll see what that number comes out tomorrow. All things equal, that is the big news tomorrow morning at 8:30 Eastern time. And if it has anything, if it has any correlation to what we saw today, we may see another very high, potentially record-breaking PPI number for tomorrow morning at 8:30 Eastern time. So be aware of that. As always, I am not trying to trade the news. I will always trade the reaction to the news, right? So I'm not trading right at 8:30, but by 8:35, 8:40, 8:45, once the dust settles around that news report, we will certainly be looking for opportunities to trade the reaction. Now, tomorrow morning, don't forget, and every morning, we'll be in our trade room at 8 o'clock Eastern time. I would love to have you there, right there with us, trading this stuff right along with us. I'll put all the membership links you guys need for our trade room. I'll put all that for you right in the description of the YouTube video. I would love to have you come out. You got to get registered as a member first. Grab the link in the description, or there's a big button for you below this video tonight on the trading blog. So big news tomorrow, 8:30 Eastern time. Got some jobs, got some PPI. Again, I think everybody will be paying mostly attention to that PPI number. And we got a bunch more news on Friday too, right? Retail sales, industrial production on Friday morning. We'll talk about that in tomorrow night's newsletter. Let's get back to our charts though here for now. S&P, Nasdaq, gold is ready. Glad to see you are here ready to go as well. Let's jump into the S&P first here because, again, like I mentioned earlier, that news report this morning, right, that CPI report came out and pretty much, right, tossed a grenade into this market, and which ultimately was the undoing, right, of that potential rally we talked about in last night's newsletter. Market, of course, ends up going 1, 2, and almost 3 legs down to that 40-44 area we talked about in last night's video. So, key takeaway right now, we are definitely bearish. There is no doubt about that. We probably will see that 40-44, that 40-37 and a quarter area at some point here, maybe overnight or the early parts of tomorrow morning. The first thing I think of when I see a market that moves pretty much 3 big legs like this is you have to anticipate we're probably going to see a range here tomorrow. And so you want to think about it here. Kind of the key takeaway for this market is you want to think about this as kind of, again, likely going to see a trading range as we start going into tomorrow's trading session. My job, whenever I have a bear market into a range, is to find levels of resistance above that trading range and ultimately look to sell, right, those levels of resistance using that trading range below me as a magnet. Right? And then the nice part about ranges is that I can also measure the amount above that range. I can project that on the other side, and I can use that as a target on the other side of the range. We call that the pendulum swing. So there's lots of different ways in which I can find levels of resistance overhead. I can draw expanding triangles. There can be trend lines coming down. So the key is just find levels of resistance above that trading range. Think of the range underneath us as a magnet. We'll look for entry setups like failures and bull traps above the highs of those range. And again, we'll try to sell using that pendulum swing as a target on the opposite side. So I go back to my chart now. You can kind of see what I'm talking about here, right? I've got my triple measured move down at 40.37. And again, right now, I'm just kind of anticipating where is this range going to be, right? It might be the range down here for all I know for tomorrow, right? It may end up going sideways here tomorrow morning, a little bit lower. Let's say right now, though, let's just, for example's sake, let's say the range ends up right here. But again, this range may end up here a little bit lower once we settle into that 44 area. Once we find that range tomorrow, assuming we do find that range going sideways, at that point now, we start identifying levels of resistance right up overhead. What I would love to get tomorrow, my favorite potential short tomorrow would be, you'll notice I've got this channel coming down overhead. I've got this thing drawn up off of these lows. Let me get rid of these so we're not keeping too many things on this chart right now. I can mark up that low, I can mark up that high, and you can see how well that midline, it just fits like a glove in there. So that would really be, if I had it my choice tomorrow, that would be where I'm looking for, right, the shorts, the best potential entries right off of those highs. Now, to short that pop, right, to sell that retracement, whatever you want to call it, I always like to use failure patterns. So for example, I'd like to see us pop up off of this low, see if I can get those buyers to come in now, see if those buyers will foolishly try to buy a pullback, and when they do, I'll look to sell into their stop losses and then try to add to the position on the way lower with a pullback setup. We call these failures into pullback combination setups. Very, very common after a big move down. And again, anticipating there's going to be some sort of range here. Now, in all reality, we don't need there to be a range right now. The market could simply bounce off that low, right? Come up above the moving average, run into that channel, get those buyers trying to buy the first pullback, sell into stops, and of course, sell that pullback right on the way back down. Failure into pullback combination. So it doesn't need to be a range, but I would anticipate a range at some point tomorrow. Now, I should also mention too that if sometimes we'll get some really big pullbacks here when you get these big grindy days here. Keep your eyes on that round number up there. Now, we may not go all the way back to that 4,100. But let's say, for example, something happens overnight and the market really spikes up, right? Really jumps here overnight. There's a good chance by the end of the session tomorrow, we end up right back down to those lows again. If we do see, again, I'd like to get this thing into the top of that channel, get those buyers to try and fail, and use a failure pattern to sell off that high. If for some reason it was to get above that channel though, right? Really pops above that channel. An easy rule of thumb is if we make it above that big bear channel now that momentum will be a lot stronger for the bulls. So what I'll do is I'll use a slight variation of that entry setup. We call these nested variations, those failures. I'll look for the buyers now to try twice, right? Try once, try twice. And once those buyers try twice on the pullback, now I've got all the aggressive buyers, the conservative buyers, right? And I can look for that short now going back down again to that range low. Now, keep in mind too, oftentimes when we see those big bounces off the low and we get those nested failures, oftentimes what will happen is when we get short into those into those stops, it really runs on strength. And when it does that, we oftentimes don't get that pullback that we want. Right? Again, I like to look for that pullback to the moving average. We oftentimes don't get that pullback, and if we don't, I like to wait for the trap entry on the above that last high, right? These are pretty common when we get those big pullbacks, those steep pullbacks. Grab that failure pattern, and then again, look for that trap entry. It's usually just above a prior swing on the way back up or back down to retest the low. So those are some things I'm watching for again here tomorrow. And again, if we do end up going sideways here, not a lot changes. We're just waiting for the pop, waiting for the failure, and selling it back down. Now, of course, I also mentioned in the intro that there's a lot of space down here. There really is, right? There's a lot of open space. If we can crack below this 44.37 area, you'll notice there's quite a bit of open space here. If we do get a breakdown here overnight, what you would want to keep your eyes on would be kind of how the market breaks down. For example, if we just simply roll lower here, right? If we just roll lower overnight, not a lot really changes, right? I'm still waiting for that pop. I'm still waiting for those buyers to come in and try and failure into pullback combination. However, if we do see, let's say, for example, we take out that measured move, the bears come in and they whack this thing and run this thing lower. This is considered to be a breakout of this channel, the breakout of what is expected to be that measured move. So if we do get this 1, 2, 3 breakdown, that's when you want to start getting more aggressive, mark up the low, mark up a new high, and we're looking for shorts off the high of that channel. Now, when I'm looking for that short off the high of that channel, my two favorite entry triggers are what I call bull traps and buyer failures off the high of that channel. Another breakdown pattern I like to use will be, we call a two-try trap, which would be a strong move down, a shallow pullback, and a lower low in price. At that point, I can mark up that high and I can look for that trap above that high, right? That trap high above that prior swing. That is another one. Just be aware of that, right? As we go lower, again, that 4,000 big round number is a very easy milestone to see on pretty much any chart time frame. Do we get the 1, 2, 3 breakout pattern, or do we get the 2-try breakout, right, as we're running lower? Those are two setups I'm watching for as we go lower. But again, just be careful. Don't be surprised if we settle in here into that trading range when it happens, right? We're shorting those pops off those highs. Now, last but not least, I'm sure most of you guys are wondering, okay, at what point can we buy this market right now? Really, at this point, with more inflation news coming tomorrow and potentially some more bad news coming on Friday, we definitely have to be careful trying to pick a bottom in this market right now. The bulls have zero momentum here at all. I'm very hesitant at this point because of that wide open space below that I mentioned. I'm very hesitant to try to pick a bottom with a crown reversal pattern off of these lows. So the only way I'll be comfortable being a buyer at this point now will be with a reversal. There's a couple different reversal patterns we teach in our video classes. The one that I would trust the most if you're a rookie out there, or not quite familiar with all of our setups here at School of Trade, will be a 1, 2, 3 reversal pattern. So again, this one requires a pop off the low, but now instead of buying that first pullback, I wait for that jump off the moving average. Again, this is called a 1, 2, 3 reversal pattern. And then once I get that 1, 2, 3 reversal, remember, I'm not going to buy that first pullback. That first pullback, I want to sell as a failure. But if the buyers can grab it though, then I'll mark up that high, I'll mark up that low, and I'll do whatever I can to get in on that first pullback. The objective at this point, we have to assume, is to get back up into that trading range where we came from and spent a good part of the morning session here this morning. And again, don't forget, after we get those 1, 2, 3 reversals, I'm not just simply buying the low of that channel. What usually happens is we'll get either a bear trap trigger or we'll see a failure pattern right off of that low, right? Oftentimes it'll be a trap, right? It'll be a trap into a failure, into a pullback combination. Trap, failure, pullback combination. Now, don't take my word for this one. I'll go into a lot more detail of these specific entry triggers in our video classes. In fact, as part of our free trading course, I include all of those entry setups, right? Those traps, those failures, those pullback combinations. We see a lot of those in our trade room. I'm not going to go over all the details here tonight, but I'll put a little link up there for you guys in the upper right-hand corner if you want to see lots of examples of what these entry triggers look like, the rules that we use, and the best market conditions to use them in. It's all covered in the free trading class. I would definitely grab that link that popped up there in the upper right-hand corner. Take the free course. That way, the next time I say failure into pullback or failure to trap combination, you'll know exactly what I'm talking about. So looking pretty good here. Again, pretty straightforward here on the S&P, and this will be very consistent across most of these markets here tonight in the video. S&P, of course, is bearish. Nasdaq is pretty much just as bearish right now. Maybe not as bad, but remember, the Nasdaq had a lot more down days the last few weeks here, so it's almost like the S&P is playing catch up right now with the NQ. NQ, of course, you can see is bearish as well. Unlike the S&P, the Nasdaq has made two very big legs down. We're sitting right at that measured move, and again, I would anticipate with a market acting like this, right? Market kind of just grinding lower here. I would anticipate to see a trading range at some point tomorrow. I don't know exactly where that range will be at this point, but I do know though that when bear markets grind lower like this, oftentimes it will result in a range the following day. As you can see, I've marked up my levels of resistance above my prior swings. I really like this rising trend line, right? These expanding triangles are really powerful, right, for chances to sell. And if I had to choose my best place to get short tomorrow, that's definitely where I'll be looking. You'll notice I've got this trend line off the low, trend line off the high. If I can combine these two areas, that seems to be probably the best possible spot here for us to get short on the pullback. And then of course, if we do keep going lower here, we got plenty of space below. We have a very minor level at 872 and a quarter. The much bigger level though that I would really be focused on for another big leg down is that 12,711. And then we've got some really big wide open spaces here until we get down to that, 12,300, things like that. And we had some very big rallies a few months ago that are now leaving this wide open space to collapse back down to pretty much where we were before the new year. So we've definitely got some open space below us. I'd like to find a way in before we start that collapse tomorrow. It's very difficult to tell how far this market will grind down here overnight, but the idea is still pretty straightforward, right? Pretty simple. Let me talk about on the S&P. One thing again I like is that combination of that triangle high and that channel high. I would love to get us up. Now what's nice about this one is you've got that strong move down, that pullback and that lower low. This creates that trap setup. So now we've got the possibility here for a trap into a failure, into a pullback combination off of that high. That would be my favorite way to trade this market for tomorrow, right? Again, getting above a prior swing. You've got that strong move down, that shallow pullback, that lower low in price. That sets up a nice spot there for a trap high. That, of course, trap then, we expect buyers to come in, try to buy the pullback off the EMA. Those buyers, of course, are on the wrong side of the market. We'll look to sell into those stop losses. And then don't forget the pullback pattern, right, to finish the job off as we make that move back down into that trading range. Keep in mind too, right, just like the S&P, if we were to really bounce, right, and get well above the top of this channel, momentum becomes a problem, right? I still want to be a seller on this until we get that 1, 2, 3 reversal pattern. But if it really pops here overnight, I definitely won't be worried about selling it. What I'll have to do though is make sure I give those buyers, give them one try, give them two try. And remember guys, when we get these, we call them nested variations of these failures. When I've got the buyers here trying once, trying twice like this, what I can do is I can draw a swing off that high, grab that trap, right? Those trap entries are probably the best possible entries. A very close second place will be drawing a trend line off of that low, a trend line off of that high. That is another one of my favorite ways to trigger that trade short. Sometimes we don't get those trend lines or those traps, and sometimes all we can do is simply sell right into those stop losses. And remember, don't forget, if we do get those big pops up, those buyers struggle to hold and we sell into those stops. Again, whether or not we're selling a trap or we're selling into stops down there, right? At that point now, we oftentimes will see this market run lower. You're not going to get the original pullback, right? You're not going to get that. What is very typical is that pullback combination, right? That will be great, but oftentimes you won't get that pullback right away. Oftentimes what will happen is the market will run lower and kind of make that strength move going back down in. When that happens, that's when you take out your traps and find that trap entry before we finish off that move back down to those lows. That makes sense, right? So deep pullback for that nested variation, and then keep your eyes open for that trap entry on the way back down to retest the low. And again, I've got hundreds of examples of these specific entry setups, entry techniques, entry triggers, and all the rules. I've got those all included in that free trading course that's linked up in the upper right-hand corner. So if you're serious about your trading results, looking for more consistency in your results, definitely grab that link to the free course. People love that free course. A lot of folks, right, do very well with it. So we've got the bounces here. As the market market rolls lower, right? If the market rolls lower here, as we roll lower, right? Again, do we just grind lower? If we're grinding lower, nothing really changes. We mark up those swings. We're looking for those traps, those failures into pullback combinations. The same thing we talked before. What I've been looking for, though, is does this market really accelerate as we go lower? If it does start to accelerate as we go lower, now we know they're looking for, again, probably not that 872, but that 12,711 area that I talked about earlier. If we do see this market, for example, make another strong leg lower here overnight, or run down, pull back, and jump off that moving average. What is that called? It's basically a breakout, right? It's a 1, 2, 3 breakout pattern. I'm not going to chase the market lower. I'll mark up that low. I'll mark up that high. And again, we're looking for whatever entry setups we get to trigger off the high of that channel. The most common, as always, are going to be buyer failures and bull traps off that high. And again, don't forget, those failures oftentimes turn into those pullback combinations as we go into the highs of those channels, right? So kind of keep it in mind for tomorrow. And again, you'll learn more of those details, the entry setups in the free trading class. Or if we do see a very strong run down, that shallow pullback, that lower low in price, yeah, that's always where I start looking for traps, right? Traps above those highs. And remember too, you always want to try to line up those lows, line up those highs, extra bonus points for combining those trap entries off the high of that new channel. Those are always something on our radar. Again, especially if we get another very strong leg down here. So keep your eyes open for a range. Again, this range will probably show up somewhere here overnight. Once we have that trading range going sideways, we'll then simply wait for those bounces, grab those failures, and use the range as a magnet down below us. Last but not least on the Nasdaq would be, how do we reverse this market right now, right? Can we get a reversal off of this low? Well, there is a major turning point here right now. We are at a measured move. We're at that big round number. However, though, I'd be very, very careful in these conditions, especially with big news coming tomorrow, trying to pick a bottom in this market right now, especially since there's so much wide open space down below. There'll probably be a lot of bears trying to attack this stuff, anything that bounces off this low. But if the buyers, if they can get this thing to bounce, and then if they can miraculously hold that pullback and jump off the moving average, again, I'm not going to try to buy that first pullback. No way. It's too bearish right now. But if the buyers can hold that pullback, then I have no problems whatsoever, right? I have no problem marking the high, marking that low, and then finding any of my favorite entry triggers to get in off of that low, right? A seller failure, a bear trap coming up the low of that channel. And again, you'll learn those details in the free course. Now, of course, the target for the buyers here, relatively easy, right? Target for the buyers, back up to retest those highs, 13,350, 13,300, back up at the high of that range there where we started from last night. So, of course, we got a pretty good plan on the Nasdaq, pretty similar to the S&P. Just kind of waiting to see where we get that range tomorrow. I would expect the range, and then we'll be shorting the pops, selling retracements, right, for that retest of the lows. Just keep selling those bounces until this thing reverses with that 1, 2, 3 reversal. Nasdaq's ready. Gold is up next. Here we'll wrap things up on the gold. Now, gold is a pretty interesting chart tonight because, of course, gold's coming out of a trading range, unlike the S&P and the Nasdaq, which are potentially going to be developing a new trading range at some point tomorrow after just big moves down over the last couple days here. What do we know on the gold? Well, one of the obvious facts here is, right, the buyers, of course, early in the session, they tried to buy those dips. Didn't last very long, though, right? Market, of course, rotates up and then completely collapses, most likely being dragged down with the rest of the markets here today. We're definitely bearish. The key takeaway right now is it does appear that we have broken free of this trading range. I say that because we had this rotation off the low yesterday, and when you get those big rotations off the low, it should have gone up, and at the very least, it should have gone up and retested those highs here. So the fact that we did not retest those highs, the fact that we did not complete the pendulum swing that we talked about in last night's newsletter, right? We didn't complete that, right, that pendulum back around those highs here, along with that failure, along with the sheer strength of this move lower here. You can see they finished the day today with pretty much an exclamation point on it, those big runs lower there. This is looking like a bear market, and what I would anticipate for tomorrow, taking the amount that we bounced up and projecting it back down again. And again, as I mentioned earlier, there's a lot of open space on these charts right now. This 1813 area is a very, very minor, it's like a little straw, right? It's nothing down there. So you can see, again, there's all that big movement that can just evaporate in a heartbeat here, and we can easily tumble down to that 1800. What I would anticipate here on the gold is to have this thing continue here and then start to find a new range down around what we call that double down target. Now, of course, there's always potential the market may react and go back up into that range above us. But right now, though, the bears have all of the control. I'd be very, very careful trying to be a buyer on this chart right now. When I look at this chart, the first thing I think of is we've got a great spot for a trap. We've got to get a bear market, a strong move down, a shallow pullback, a lower low in price. There's a great spot here right now, and that will be kind of my favorite trade for tomorrow. I would love to get up, get that trap above that high. That trap will oftentimes turn into a failure add-on, and of course that failure then will turn into that pullback combination, right? Traps into failures, failures into pullbacks, and pullbacks, of course, back down to retest a low, right? The trap, of course, is above the high. The failure is right below the moving average. And of course, that pullback is after we get back below the moving average and get that pullback right back up to the EMA. So again, trap, failure, right? Trap, failure, pullback combination. That would be something on my radar here for tomorrow. Also, too, if the market does really pop up, I almost put a trend line on here too. There's a big channel up here as well. It's a little bit ridiculous how big it is, but even if I draw it a little bit steeper like that, right, it's still pretty darn big. But you can see kind of what I'm going for, right? If I draw that trend line there, bring it up around those highs, for all I know, maybe it's a little bit, right? Maybe it's off that level right there. You know what I mean? I could see that a little bit too. So if we do see, probably not the best example of a channel, but if we do see this market, again, I'd like to see this thing trap, failure, and pullback combination. If we do see this thing really bounce, though, up into the underbelly of this range, anticipating there's probably a channel up there as well, what do we do? I still want to short this thing because, again, we're so bearish right now. But at the same time, though, I have to respect the momentum of the market, right? So if we do end up bouncing hard at that point now, just give the buyers a couple tries here. Let them try once, let them try twice. Again, I talked about the variations, right, in the Nasdaq, right? Find the channels, find those traps. So again, I talked about the variations for you guys on the Nasdaq. The end result, though, is we're trying to use those stop losses as fuel for that run lower. And again, keep your eyes on those trap setups as this thing comes over. Keep your eyes on those traps. Again, it's a failure pattern, oftentimes into a pullback combination, but in this case, right, oftentimes if we get that really deep pullback, it'll really collapse off that high. We can grab that failure into trap combination as we make that move back down to those lows. So be aware of that if we do see this thing really bounce hard, again, underneath or getting above the channel, but underneath that trading range. Now, I'm sure you're wondering right now, what if we keep going lower? If we keep going lower, not a lot changes. I'm going to still keep marking up those highs. I'm still looking for those traps, those failures, those pullback combinations. These will obviously be something to be watching for, right, as we go lower here. So be keeping an eye on that for sure. Again, traps above prior swings, failures as the buyers try to buy those pullbacks, and again, pullback patterns as we transition back below the EMA Targets, of course, again, are at those lows. The only other variation of that would be if, let's say, for example, the market was to pull back right now and then really blast right through that low. If we get that 1, 2, 3 breakdown move, the job is pretty simple at that point. Mark up that low, mark up that high, right? And find your bull traps, find your buyer failures, right? Find one of my favorite entry triggers. And again, I talk about those entry triggers in the free course linked up in the upper right-hand corner, right? Find one of those entry triggers and get short off the high of that channel. Because again, I do think that double down target there, 1800, 1798, that 1798 area is actually not the double down. It's actually a prior, you'll notice it's a prior swing high there. So very, very likely at this point, unless the buyers can put together a miracle tomorrow and save the day on this. Again, like I said, it looks like these markets have this cliff they're looking over right now. It's not just the gold, right? It's the Nasdaq, it's the S&P. As they kind of look over that edge right now, I hope I can find a way in tomorrow morning before we jump off the edge of that cliff. So that's some stuff I'm watching for here tomorrow. If we do end up really moving lower, watch those two trap setups, right? Traps will definitely be on our radar if we start to accelerate going lower as well. But now you kind of know what I'm looking for as we kind of grind lower, or if we really run lower here on the yellow metal. Now, how about a reversal? Again, I wouldn't be looking to call a reversal here. If we were a little bit more put together inside this range, I would suggest a nested failure for a long, but that's going to be a little bit aggressive right now, right? Again, the failed rotation off the high, the punch into the end. If we had completed rotation, if there was a little more stability to this range right now, it doesn't feel like there is, at least at this point. I might be wrong, but again, you're seeing some very shallow pullbacks here. I would be expecting anything goes higher here right now to be sold. So I'm very careful here trying to find that bottom on this area. It's not going to be easy either if we do get a reversal here. If we do get a reversal, if it does jump higher here, if those buyers do hold that pullback and go, you can see it's not going to give us a lot of open space. So, if we do get the reversal right now, what will probably end up happening is, again, say we do pop up, the buyers come in, right? The buyers come in, they hold that pullback, and they jump. At this point now, I can definitely look for that first pullback off the low. I just want to make sure that pullback is, I want to make sure my entry is before we retest these highs, right? So you want to think about this. If we were to see something like, for example, if the market was to really, let's say it really jumps overnight, they hold that pullback and they start really racing higher here, this is definitely where those traps will come in handy, right? You'll mark up that prior swing, find that new channel high, find that low. So if you find yourself up around those big time highs and that's your first pullback, really try to find that trap entry, because after all, trap setups or trap triggers or trap entries, whatever you want to call them, they are definitely the ones that are best suited for buying into those highs here. All right, so be aware of that, right? If we get the entry late in the move, I'll look for traps. If it just simply pops up above the moving average, the buyers take this thing and run it higher here. Our job is relatively easy at that point, right? Finding those entry setups. And it could be pretty much any of our favorite entry triggers we talk about in the free trading class that can apply to that low here. It gives you plenty of time to get in before we retest those highs overhead. All right, so again, be very careful trying to call a bottom on this one. Get a lot of momentum for those bears. And again, I think some pretty wide open space down below us for some nice big targets here. And let's find our way in here for tomorrow. Now, speaking of tomorrow, of course, is right around the corner. Boy, Thursday is coming at us real fast here. Again, we get some big news tomorrow at 8:30 Eastern time, so don't be late tomorrow morning to the trade room. We open the trade room up every morning, Monday through Friday at 8 o'clock Eastern time. I would love to have you there, right there with us. I'll put all of the membership information you guys need. I'll put all of that in the description of this YouTube video. I'll also put a big button for you guys on the blog at Sideways Markets. So grab that button, grab that link, get registered, and I'll look forward to seeing you tomorrow morning, trading along with us in the trade room. But also, don't forget too, you can always call that toll-free phone number. Don't let my ugly mug scare you away there, right? Call that toll-free number. I'm always here in the office, and be happy to answer all your calls. calls and answer all your questions and help you get registered for tomorrow. So don't be afraid to call that phone number. And also, I've got live chat on the left. I've got live chat on the right. So don't forget you can always chat with me here in the office here in Los Angeles. Guys, don't forget, make sure you subscribe to our YouTube channel. I don't want you to miss tomorrow night's video. Drop me a comment if you guys have any questions. And as always, by now, I hope you guys have hit that like button, that thumbs up here, if you guys enjoyed the content here on this video newsletter. But enough of the video for tonight. Have a great rest of your evening. Thank you so much for tuning in. I'll see you tomorrow morning at the opening bell. If not, we'll see you guys same time, same place tomorrow, and we'll get ready for Friday's trading session. That's it for me, guys. As always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.